Awesome, man. So we'll get started in just a few minutes. I'm just kind of make sure we have everything set up here. We have our economic calendar. PPI report is the main report that we'll be on the lookout for today. Okay, awesome. Just making sure it's good. Oh, just a few minutes until that gets released. Good morning, good morning. We have a PPI report that's going to be released in like 5 minutes. So we'll do as always, we'll make sure to analyze the market. We have our zones from yesterday, which from kind of just by the looks of it, it seems like we don't have to edit too much, but we'll refine it if needed. We'll make sure to do that review. We'll make sure to align today's fundamentals as well. So yeah, man, let's have a good trading day today. Good morning. Share this. Needed a little boost this morning from our friend Celsius over here. Not the biggest fan of drinking too many energy drinks, but had to be done. But all right, guys. So now that we have the PPI report that's going to be released in the next couple of minutes here, just by kind of overviewing the market. Remember what we were looking at yesterday, which is we had a strong drop that came from these highs around the 47.05s. It was a fairly clean move, right? We had some good moves take place. We were talking about how with the higher inflation report, we understood that this could lead towards more dollar strength and therefore pressure gold. And so the main ideas really were to be on the lookout for exhaustion around the 47.05s. Anything above the 47.05s would signal from a technical perspective that we can have deeper pullbacks, at least up into these highs like the 47.25s, but we didn't get that. We got the exhaustion at the 47.05s. Price failed to really stay and close above that. So it did signal to us that it did show us that the market impact from that CPI was fairly strong. And then you can see that follow through. The follow through was fairly clean. This was literally just after we ended our stream, we ended up getting that push towards the downside, finally really breaking below that support. Candle closures below that support. You started to see that strength in sellers come in again below these lows, which we were talking about. We were really connecting it with these lows right here, this area of support that we had at the 46.85s. And so you can see we made a full move down into these lows, the 46.50s, which is where we pushed slightly below that, as you can see, but it was really more so of a liquidity grab because candles failed to stay below. The following candles couldn't even retest that area. So it showed us once again that buyers were still interested in these lower price points, these 46.50s right here. So that was like that main area that we were looking at in case we were going to continue to break lower. So we had planned for that. We had talked about that, again, below those 46.80s, how we can make it push down. So we got a fairly decent push there, right? Now, as we approach this PPI report, it seems like price overnight kind of recovered, even pulled back all the way into those 47.25s, which once more we rejected, and we've made our way back down. But you can see how within this area, which is what we were talking about yesterday, it's kind of like creating somewhat of a range. It gets stuck within this zone in between like the 47.05s and these lows at the 46.85s, 46.87, which is where price is as right now. You can see that right here, right? Like if we go and take a look at that really quick on this board, just to kind of zoom in a little bit as just before this PPI report gets released. Look at how, again, you have the ranges that got created within this minor area right here. That was from yesterday. Again, another range. So it sort of gets stuck in between that area right there. And so right now, there we have some volume coming in. Let me just clear this here. How do I clear that? How would I clear it without? I don't want to erase everything. Whatever, that's fine. But all right, let's go ahead and take a look at that PPI report. It looks like we have a fairly strong reaction. I want to go ahead and take a look at that. Let's just give it a second to load here. We have, oh wow. Okay, so let's analyze this. So we have the forecast and the previous numbers as well as the actual. Okay, let me read that over once more. We have previous, forecast, and actual. So if we scroll down, we have that right here. Previous, forecast, actual. So we have the forecast, which is what we want to take a look at, 0.4%. That's what market participants were expecting, right? Market economists. We have 4.7% as well. And if we look at the actual number, we have 1.4%. So that's above the expectations there, and 6% also above expectations. We lined that up with yesterday's inflation report, 3.8% above, 2.8% above, as well as 0.4% above. On all reports that we've seen this week, sorry about that, guys. What I was explaining, just to kind of quickly go over that, I forgot to change the angle there. I was just kind of going over the inflation reports, which we have all high inflation reports from yesterday. Today's inflation report as well, this PPI number, 1.46%. Everything is showing us higher inflation, right? So same idea that we were going on with yesterday, right? We have higher inflation still coming out with the economic data that we just saw. Still should give us more dollar strength as the markets reprice the idea that the Fed may not be looking to cut rates anytime soon. We already understood that, and we know that this is something that the market could already very much be priced in, right? Because this is kind of this has been more of the focus, especially after yesterday's report. Yesterday's report, to kind of like repeat myself here, higher inflation, that led to stronger bearish price action on gold, which as you can see, made a full move towards these lows here. And so for today, in my opinion, we could be on the lookout for something similar, unless, just like yesterday, like funny enough, we're literally at the same price point. If we are to get any sort of recovery in price above these 46.90s, that's where we go back into that area that I was talking about, where we sort of stay stuck, right? We sort of stay stuck within a small range there. And so if we're gonna have strong price action, what should we prepare for? So even before I go into like the trade ideas, let's just make sure really quickly, because we have the inflation report. The zones look fairly good, but I just want to refine like this one. Like for example, it's just too big. So I'll go, for example, and mark off these lows. So we got lows marked off here, which is the 46.90s more or less. That's the area that we're gonna pay attention to in case we trade above that. If we trade above that, then that could very much mean that some of this information may be priced into the market. We may look to do some deeper pullbacks, and we'll be on the lookout for some deeper pullbacks into these higher price points, which is literally the same area as yesterday. The 47.05s, which is, as you can see, ton of wick rejections at this area, price action bouncing from the support into that resistance, exhausting, rejecting, and still making a push lower. So right now, again, with this stronger PPI report, as markets price in the idea that rates could, not will, but could stay higher for longer, then we could see further dollar strength. Looking at dollar, following yesterday's analysis that we had, which is, again, to be on the lookout for further, for more strength on the dollar. The idea was simple. It was simple because we had price at this area of resistance, which was the 98.2s. And we understood that unless we're trading, say, back below those 98.2s and rejecting this area of resistance, then the possibilities were that price was going to continue to climb towards the upside as we got more dollar strength post that CPI report. And that's exactly what we saw, right? Price failed to really like trade any lower. We didn't have a very strong rejection off that area. And we actually ended up pushing towards the upside later on in the day. And we got that dollar strength, right? We got that dollar strength as gold made its way towards the downside before it made a slight recovery, right? So again, idea is similar because now if we zoom in, we could even mark off these highs right here, which, as you can see, lines up towards the left. We have the current area where price action is reacting and rejecting. That's the 98.5s. We have towards the left 98.5s also as an area of resistance here on the dollar. So we know that's a key zone to be on the lookout for and that we would want to break above to really signal more strength there. If we extend this line here that we have of resistance, we can see even in the past kind of like areas where price was reacting before pushing lower. You can see that right here as well. Price action kind of reaching this zone, minor reaction, a push above before we got that retest of that area, and then this rally here on the dollar. So we have plenty of reactions and it validates this area for us at the 98.5s. Okay, so we'll be on the lookout for that. In case we are to see a ton of dollar strength, we'll most likely be breaking above those 98.57s there. And as well as with gold, again, we'll want to be on the lookout if price action is going to be strong. If these sellers are going to push price lower, we want to see that momentum pick up and stay below those 46.87s. Makes sense? So let me know if anyone in the chat, what's up, Eli? Let me know if you guys have any questions when it comes to this report here that we're looking at. This report, the price action, is there any zones that you guys think I missed out on or anything like that? I think we have it fairly well, to be honest. But let me know in the chat, guys. I think we have the right idea. So give me 1 second, guys. Sorry, I changed the angle there by mistake. Yeah, we'll talk about that in just a second here. Because we have our analysis set up. Now that we have this PPI report as well, what we can do just really quickly, let's go ahead and zoom into those lower time frames. Or actually, before we even go into the lower time frames, let's first look at the overview. Excuse me. Yeah, no worries. So we've done our analysis here in terms that we just got that PPI report showing us that inflation is still stronger, or it's rising. And so the idea right now, let's looking at this on the 1 hour. Let's just zoom in a little bit, and then I'm gonna go to the whiteboard and let's talk about the possibilities of price action, right? What could we see? And then we'll go on to the lower time frames and really start to try and follow through on that. We still have time until like the 4-hour candle closes, so we'll make sure to be patient there. No need to rush into anything like that. Obviously, if you have your own analysis, appreciate it, Eli. If you have your own analysis, feel free to send that out right now, and then that way we can start to talk about that. Make sure we have that ready before that 4-hour candle closes, right? So again, we have, let me go to the whiteboard here. So looking at price action from yesterday, for example, which is, this is what we were doing yesterday. This is the area that price action was at. We can see the amount of sellers, or excuse me, we can see the strength of sellers that came in from those highs, those 47.05s, right? And then we can see the strong push that we got below those 46.90s right here, which we have, for example, we have an example of that even like here, even though it wasn't like a full move down, it's still a decent move in the sense that we did get below that area and we had a push towards the downside, right? Here we rejected, so that one doesn't really count, but this one right here, also another example of price making its way towards the downside here. We keep on looking and we can see that right here as well. We can see that very clearly. Again, the strong sellers that came in below that area. We can see minor pushbacks from, other than like, for example, this, we can see like the minor pushbacks that buyers had when you got below that area. So we could be on the lookout for something similar, excuse me. We want to make sure, again, just by following the clues of price action, we want to make sure, for one, we got to stay below this area of interest here, which is going to be these lows, this area of support right here. That way we know we're breaking out of that small range zone that price has been creating at this zone, right? We want to make sure we clear those lows. That way we have that strong or easy signal, let's say that clue from the price action right here, right? That's for one. We have right now the fundamentals in our favor, but that still doesn't mean that price action can't go and maybe do a deeper pullback before continuing, right? Like even if, for example, you saw price action do that right here, you can see that strong recovery even got above those areas of interest that we have there, and yet it still got to this key zone, rejected, before making its way back towards the downside there. And so that structure, in my opinion, still continuing, right? Because we have, if we follow the structure, we have, for example, this bearish structure here, which was slightly broken above, like momentarily, which is that right there, but that really didn't hold too long. It didn't hold too long. We broke above that momentarily just before we got back below this zone. Sellers started to push price lower, and now we're here, right? So what we want to do in terms of price action and following that economic data, that information that we just got, we got to see pushes below this zone. That way we can be on the lookout for something similar to this, kind of like to mirror these moves that took place here, even slightly this one, which was still a fairly decent move towards the downside, right? That's for one. The other scenario would be, if we get any sort of exhaustion, we just have to be on the lookout for candles to start to get back above this area. Because again, let's look at price action to give us those clues. What happens if price exhausts at these levels and gets above this zone right here? I'll circle it here. That zone, the 46.90s. Again, just by looking at price action, we can see that right here. Above the 46.90s, we have strong pushes, right? Above 46.90s, strong pushes. Back above 46.90s, strong push, right? You guys get the idea. Even like back in this area right here. Above 46.90s, a push, right? So you guys get the idea. You have buyers step in at those 46.90s. So that would be that area that we want to stay below. So that way we can look out for some sort of like break and retest type of scenario. Because look at, for example, this one. Look at how, if we zoom in a little bit more, just to kind of study price action here. Look at how, one second guys. Sorry. I lost the chat for a second there. Okay, there you go. If the 4-hour candle can close below the 46.85 area and we can get a rejection, I would look to further sell to the 46.50s. 46.50s, and you said below 46.85s. Okay, yeah, I would agree. I would agree, but pay attention to this. Look at how, for example, off of this zone here, you had strong selling pressure come in, right? You had very strong bearish candle right here, again signaling that sellers were very strong off of this area of resistance here. You can see the gap that we had towards the downside, and price continuing to push below those lows, right? But even though you have those strong pushes towards the downside, look at how, for example, these candles here were pushing lower. This candle here closed below the zone, but then look at the following candle. The following candle, you can see we had some volatility coming back in. Although it closed below, look at that wick. That wick literally got precisely to this area of interest, right? What does that tell me as a trader? That those pullbacks are still something that are very valid, right? It's still something that you should be on the lookout for. It's just you have to prepare yourselves in the sense of like where that could happen from. Where is that going to happen from? Again, those 46.90s is that area of interest where we want to stay below. That way we don't run into that chance or that risk or that probability that price action is going to do a deeper pullback, at least possibly into those highs, which then we can then go ahead and push lower, right? So that's what we want to be on the lookout for. Meaning we'll be on the lookout for continuation sells and more of a bearish price action below those 46.90s, as long as we're clearing those lows and really staying below. Like for example, we just had 15-minute candles. Sorry about that. We just had a 15-minute candle close below that zone right there. And so anything above that area, just be careful in terms of like for sellers, because you don't want to risk price action getting back above the 46.90s and then you get a repetition of what's happened in the past, which is at least for the most part a push back into those 47.05s, right? We got, I mean, you guys, I'll point it out, but you guys get the idea, right? You have above 46.90s back into this area here, above 46.90s back into this area right here. We have above 46.90s back into this area, and at this point even higher, right? So right now that would be the idea, meaning that anything above here, just to kind of have that visual, and that's for one. Further sells below here, anything above here would signal deeper pullbacks. Be careful for that, where you can then see further moves down. As long as these fundamentals don't shift, in my opinion, we can see further dollar strength, meaning that gold can get some more pressure, right? That would be for one. And that's really to keep things simple, right? Because again, anything above those 46.90s just makes things a little bit tricky. It gets things a little bit more messy. So you would have to be more patient, right? So going into this new 4-hour candle that's closing within the next 12 minutes, depending on how this candle closes, again, let's look at price action to see what has happened at this area. We already saw this right here, which is that even after price closed, we still saw pullbacks into this area before finally really pushing towards the downside. Where did that happen again? Yesterday. Yesterday we had that strong CPI report. We had the rejections off of that zone. Look at that candle closing below that area. That's a very strong candle, right? That's a very clear signal that sellers are in control, right? At that point, right? When you're looking at that candle, that's what you get from the price action. That's the clues that price action gives you. And yet still, even after such a strong candle close, look at that following wick. That following wick still, after the candle closed, pretty much went and retested that area, got slightly above that zone, but exhausted, and then really made its move down before price action once again got back to that zone, showed no exhaustion, and then continued to push higher. So what does that mean for price action right now? Say we close around the lows. Say we have a strong candle closure. I don't even want to write, but say we have a strong candle close around that area right there. In my opinion, what we could be on the lookout for as that new 4-hour candle starts to form would be a pullback at least to correct some of this move, right? Let the market settle a bit and cool a bit before possibly making that move towards the downside, right? And what we would want to see after that, if we are to get, like, let's say that retest, we got to get that break of the lows here. That way we can have stronger probabilities that price action is likely to mirror a move like we saw in the past, right? So we, at that point, we know, okay, break and retest below these areas. Watch if price action is getting above this zone, because at that point, we're back in a range. We don't know if price action is going to stop here, 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 here. At that point, we don't know because it's messy around that zone, right? That's what we've seen in the past. So that's why in terms of probabilities, higher risk to reward and better opportunities to look out for, it would be below those 46.90s. If not, just be patient, wait for higher price points of interest to then be on the lookout for further sells, rather than you trying to chase the market or hope and pray that is gonna go in your favor. Make sense? So that's what we have. We have that in the next 10 minutes there. Let's go on to those lower time frames and analyze that. It's honestly looking fairly similar to yesterday. Like if we zoom out and we look at yesterday's price action, again, let's analyze that even more. Now we're going lower into those lower time frames there. One sec. So we have yesterday's price action, which was basically all of this. You can see after the CPI report got released, instead of making a move straight down, which is kind of what we're seeing right now, we actually had price action sort of, it stopped momentarily at this zone to retest these highs before making that move down. But notice how the move down wasn't just a straight move down as soon as price action got to that area. Notice how price action got to that area, which we were talking about yesterday, and we understood that below, we needed to stay below that zone. Anything above that area can make things very tricky because it was ranging above that area. Same thing right now. Right now we're seeing the range already got created. We've seen already price action retest and exhaust and reject at those highs, which is what we saw right here, right? Similar thing. And then again, as price action gets to that zone of interest, look at what happened. Again, you had a little bit of pushback from those buyers trying to push price action back up, but sellers overall ended up really closing and getting below that area. So that's what we can be on the lookout for, right? Just be careful on these lower time frames in case you start to see any sort of exhaustion and failures to push below these new lows, for example, like these lows right here that were created. We want to make sure that with the optimal price action, we get below those zones, don't get back above that area, so we can have a fairly decent move lower, right? So similar thing right now, nothing above that zone, break those lows, something like this. That's what we could be on the lookout for if we're gonna get those strong moves here on price action. Does that make sense, guys? Pretty sure that does. So again, right now, look, it looks fairly clear. PPI report higher than expected. Excuse me. Higher inflation. Dollar strength still active. Trading below the zone. Really, what you just have to be on the lookout for is the 4-hour candle closing within the next couple of minutes. And now all we got to do is really wait, to be honest. Let me leave that there. Does that make sense, guys? Do you guys have a similar plan? Are you looking for something different? Are you looking to go against that analysis altogether? Are you looking for exhaustion at those lows for maybe a possible recovery back up? Tell me, guys, what are you guys looking to do? Yesterday's move was, if we measure from those highs all the way low, that's over 600 pips worth of market movement that ended up taking place later on in those days. And we don't measure that to boast or to say like, oh, look, this is what you could have done, because we know that's not realistic. It's not realistic for us to measure a move and think, oh, just because fundamentals were bearish, technicals were bearish, that means that you should have sold and held that trade. No, that's not what it's about. But what it is about is the fact that we did analyze this. We were objective. We understood the levels that we needed to stay below. And then we have that overall market move. So that way, us as traders, we understand the possibilities that the market might bring. It's good to look at that, because a lot of times as we're looking at price action, we get blinded to the idea that you think price is just going to go without you. And there's, in my opinion, no reason to think like that, knowing that so many opportunities usually come in the market. Mark those lows there. Those are those lows that we want to make sure we start to break and get below, to see if we have strong momentum, strong price action there. Yeah, I would agree. It depends on how that 4-hour candle closes. If we close somehow above those 46.90s, I would say at that point we're just stuck in that range. Better to wait for either better prices, which would be those 47.05s, or continuations back below those lows here to follow that momentum. Because it's kind of like price action is kind of reacting at the same lows. It's not a key area, but it's still an area of reaction that we see very clearly here on those lower time frames, which is we have, for example, this wick that reached this area right here and rejected. Then we have candle bodies and wick rejections also same at that exact area, before finally seeing a good amount of momentum, and then price really made its move lower. So that's what we're seeing right now. A little bit of a pause around that area of reaction, just a little bit below that area of support. So we know that's the area we want to clear. We want to clear that area so we could see some potential volume picking up, especially going into like NYSE open, which will be in the next like 35 minutes or so. That's not good for my stomach, man. Let's look at that one. Yeah, look at that. It's like we're creating a bit of a range, a bit of liquidity range below that area here. Yesterday was a lot more sporadic, I would say. Yesterday's reactions at those lows, you can see how strong they were. It was like strong bounces and pushback that we were getting off those lows. So it made it a little bit messy, honestly, a little bit tricky, because it would be like you're breaking lows, but then you're recovering, getting back above the zone of interest. And it's like, at that point, if you guys remember, I was telling you guys, anything above these 46.90s makes things really messy, because it means that price action is stuck within this range right here, right? We gotta clear those lows and stay below to really have those strong clues from price action. But then even as price action followed through, you got further breaks of lows, but then it recovered again. Price once again right here, you can see it tried to break the lows before it had the final retest, and then it made its move down. You get me? This is why a lot of times, for a lot of people, if you have a good plan, at some point you can see how maybe you were selling at the retest and you had to manage your risk, right? But with good positioning, good risk management, and you trusting your analysis, you're not here going back and forth thinking, I'm taking sells, but I just got taken out and now price is back above this area, so let me buy. Like, you're not switching back and forth. No, you're being more disciplined, more so following through on your plan, and you can see how that would have paid. That would have paid because, again, overall, even though it got a little bit messy, still the goal or the idea, that thesis is still played out. So let's zoom into now. We're about to get that 4-hour candle close in the next couple of minutes here. Actually, in the next minute or so. Let's see if we can stay below. If not, we have also like this little area right here where price is creating. Just zoom it in a little bit right there. Say we have a pullback take place. Ideally, I would prefer if that pullback didn't get above that area there, because you have, let's follow that. We got a minute until this candle closes, but this is what we have. For example, we got the rejections of the highs, and then we have the bearish structure that started to get created. It's like, for example, well, here it's just kind of ranging, but still making moves lower, in my opinion, other than like obviously those bounces that we got off of those lows. But overall, again, here you can see once again, we got lows created, lower lows, lower highs right here, another low, which is retesting these lows here. We got this lower high point right here. Okay, with that 4. Okay, so that hourly candle closed below. We did close below the zone. In terms of the recovery, which is what I was just explaining right here, the market structure that we have on the lower time frames. Remember, we're looking at the 1 minute right here and analyzing this more zoomed in. We have this last structure point that was created, which is a minor bounce off of this zone. Price created this high before you made your move to those lows and made new lows here. So let's say now as this new hourly candle forms, if we are gonna get a push, like a pullback against this bearish price action, ideally, I wouldn't wanna see it above this area, because at least if we go and retest that area, at that point, we can still be respecting bearish structure on those lower time frames. We have candle closures still in our favor below those 46.90s. And so ideally, again, we don't get back above that. So we just retest that area, reject, and then go and retest those lows once more where possibly we can break lower. If we start to trade above this zone, just be careful in case you end up getting the break back above here. You get that break back above here, at that point, literally same thing as yesterday. Price action is more messy. You have to be more patient, and you'll have to be on the lookout for price action to kind of like settle back above that zone, which from a selling perspective, that's not ideal. We want to get the rejections. We want to get price action trading below our zones of interest. That way we can at least replicate the move and possibly have a move lower. That would be the idea. And again, anything above, if we start to get like above that area, it's just literally same as yesterday. Pretty much price action is stuck within a range, you know? I wonder how you clear this. Oh, clear screen, there you go. I knew there was a button for that. Yeah, that was a strong report of the PPI. Probably haven't seen such a strong PPI report in a while, to be honest. Which is a big red flag, huge red flag for the Fed. The Fed is, I'm sure they're not a fan of these high inflation reports. But yeah, guys, we'll be patient here. We'll be watching price action. Let's see if we start to get some sort of like a new lower high point get created. All right, which could be like, let's see right here, lower high, a new low gets created. Let's see if we can go ahead and retest these 46.90s, exhaust at this area, not even get back above those 90s, and then start to make a move back towards those 70, what is that, like 46.75? That's about 100 pips worth of a range right there, a price range right there to those lows. And then obviously we have, you know, much stronger range below those lows there. And welcome for those of you that are just joining in, welcome. If you guys have any questions, let me know. I'm excited to see these lives grow. You know, for the moment, not too many people, but you guys will see. We'll start to get more people start to join in as soon as they see the good work that we do. But I appreciate all of you guys that are in this live, the OGs. But all right, 5-minute candles showing a slight recovery, right? But this is regular market movement still. It really wouldn't be anything out of the ordinary unless we get like what I was talking about, those breaks back above those 90s there. 95s to be more precise, I would say. 94s if we're talking about precision. 46.94s. We're getting a decent amount of exhaustion here on these lower time frames. Just we want to start to see some volume pick up, some strong candles start to close back below to make our wave towards the downside there. Dollar also kind of having a little bit of a pause at those highs there. Same time that gold is also pausing around the lows. So correlations are fairly strong right now. We'll pay attention to that percentage point. We're at 0.26 right now. As we watch gold, we'll see if we can get those further breaks back below. We want to see if dollar is also picking up on some strength to help with our edge there. If we see dollar start to come down and maybe start to recover a little bit, and while gold is still trading above these 90s, then we can be more patient and stay on the lookout if price is going to maybe do deeper pullbacks against this, right? If that scenario lines up. But so far so good, you know, in the sense that we haven't traded back above the zone just yet. We just got to get some stronger volume here. I want to see stronger candles. Just 1 second here. By the way, how was your trading session yesterday? For those of you that took trades, did you stay disciplined and that was it? You called it a day? or did you continue to take trades and went against your plan? Curious to know, because I know some of you guys were here from yesterday, and I know you guys took some sells. You took advantage of some sells. I want to know how you guys were able to manage your positions. Getting a little bit of more strength here. Just pay attention to that. There you go. That's what it's about, man. No trades for you yesterday. Okay, Brian. How come? I think you, were you looking for buys above the 47.05s yesterday? Is that the main idea that you were looking for, maybe? Okay. And then let me ask you this. Why were you only looking for buys? Was it just based off the technicals? Was your plan in any way impacted by the fact that we got that strong inflation report? Like, did you take that into consideration at all? Or you were just mainly focusing on maybe more momentum and price action potentially getting above those 47.05s? Because the idea the idea is valid, but I think I was explaining yesterday how you had a few things going against that, right? So like what we'll do in this session, as always, is kind of like weigh both sides, and through doing that, we'll see which one holds more weight. Yesterday, it was a lot more clear that we had a bit of more technicals on the bearish side, other than the fact that we were like kind of ranging and stuck within, or still rejecting those lows. Saw a short opportunity, but stuck with my plan for the day. All good. Because remember, when it comes to trading plans, there's always also ways to adapt, right? Always depending on like price action, sometimes the fundamentals. Usually a lot of times, like if you have, let's say, strong price action or strong technicals that you're looking at, when you have economic data come out, you'll see a lot of times price action could easily shift. That's why it's important to be aware of those reports, right? And where did you look out for that short opportunity? Do you always look at the 1 minute? I would say during the session, yes. It's not where I mainly do the analysis from, but once you have your analysis set from like the higher time frames, right? If you do your top-down analysis, you do your daily, 4 hour, 1 hour as well. But in my opinion, you should be zooming in more to price action during session, not always. Like you don't want to just randomly look at the 1 minute, at 3 p.m. unless you're like trading. But like during those active trading times, for you not to look at the lower time frames would be to like use less information. Like why wouldn't you use those lower time frames, Because the lower time frames gives clues, and if you understand how to look at those lower time frames, you understand that those lower time frames eventually translate to the higher time frames, right? Like those clues, you can follow along. Like you don't make the mistake where you look at the lower time frames and you're looking at the 1 minute and you treat it as if you're looking at the 4 hour, or as if you're looking at the 1 hour. You know, like if you find zones, like say these zones, for example, that we find on the lower time frames, it's not to say that they don't matter as much, but we know those are not the key areas. But it's still important to look at that because that's what price action is telling you right now. You get me? If we look at this zone here, like let's take a look at what that looks like on a 4 hour. Like imagine you're just trading. Everybody has their own trading systems, right? Their own ways of looking. But if you're just looking at those higher time frames, this is good in my opinion for the overview, right? When you have like that bird's eye view, right? You're kind of just like scoping the market out. It's good to understand how the 4 hour candle looks, right? But as you're trading, why are you going to cut yourself short and you're only going to look at the 4 hour? In my opinion, you don't have too much information here in terms of like timing when you're looking for entries, right? At this point, you would have to wait for maybe 4 hour candles to close, and then it's just, you're taking too long. Unless you're like a swing trader and you're trading throughout the day and you strictly look at the 4 hour, that's different. But if you're scalping, you're day trading, you're looking at price action during session, why not look at those lower time frames, right? Like align that 4 hour with the 1. As you analyze the 1, keep on moving lower, right? During session, right? So for example, here, like that previous 1 hour candle, how did it close? Below the area of interest, right? But still, all you see right here is a wick rejection. All you know is that that's lows at that area. But if you look at that same area on the 1, you can see all of the reactions that price had there. You can see price action getting there multiple times and multiple times failing to break that area. So it's an area of support that got created on the lower time frames. So you know that that's an area that you want to be on the lookout for you to have further continuations, right? It gets translated to a 1 hour low. That's really all it is. You get me? You look at the 1 hour, you understand that's a wick low. I understand that. But you look at the lower time frames and you understand it was an area where price action created a new area of support. We know we have to break below that zone to signal further strength on the seller side, right? That's why, in my opinion, you want to stay aware of those lower time frames. So don't get crazy staying stuck on these lower time frames, because a lot of times, if you're not too experienced or if you're not too used to really looking at these lower time frames, you might start to behave differently because you think the moves are happening right now, and then you become impatient. You get me? But like, for example, again, still like look at the clues that you get off at this on those lower time frames. You don't really see that on the 1 hour. On the 1 hour, all you see is one candle. That's all you see. You don't get to see, for example, how at this area we have now basically a double top that got created. So again, at that time, you can prepare yourself. Doesn't mean that you're gonna melt. Doesn't mean that price action is going to automatically move lower, but at least you can look at that as a clue to understand that, well, price action has rejected those lows, slightly recovered, and we're now basically, we have created a double top right here, meaning we have rejections at this area. Well, you still know, okay, I have my rejections, price action has made that double top. Let's go ahead and start breaking those lows if we're gonna get even any sort of moves back lower, right? Take it level by level as you see price action forming. So for example, we saw price action again, recovering off those lows, creating this new lower high point. We know now, okay, we got double top rejections at the 46.90s right here. Let's, in terms of like optimal price action for the seller side, we would want to see price action staying below that area. Why? Because you already have 1, 2 rejections. So if we have rejections at that zone, we wouldn't want to get above the rejection zone, because that means that price action could do deeper pullbacks, right? So we want to stay below those 2 rejection points, but then also we want to get below, for example, these lows, right? Where price action got to the zone, rejected, created this new low point right here, where once again kind of rejected, back to this zone, which is where we created that double top. We got to break below that area if we're going to get any sort of stronger moves lower, right? That's what we want to see. So that way you can analyze this both ways, and you know the areas that you're looking out for right there, right? Like look at, for example, right now we're getting some momentum picking up on the buyer side off of these same exact lows. Again, on the 1 hour, you don't see all of that. On the 1 hour, you just see one candle, whereas on the lower time frames, we understand what zones we're looking at. We understand what areas we want to get below, so that way we have stronger clues, so you can manage your risk better, right? Rather than you maybe just holding and praying. So at this point, again, we know, well, right now, we couldn't get back below this area right here, these low points. And now we're starting to get, if anything, pushback against those sellers that were trying to push price lower. So again, as we're maybe on the 1 hour, you don't see that. Here you get to understand that, and you get to be maybe more patient, maybe manage your risk, all depending on what it is that you're doing. You get me? That's why it's good to look at those lower time frames. Just don't get too crazy with the lower time frames. But following through on what we're seeing right now, we are getting a little bit of pushback. We're getting those pushes back above those 46.90s. We're breaking above those rejection points that we have. We had failures to get back below our zone of interest for us to have a possible move down. So that's the price action that we're seeing right now. The next area that we're looking at is that structure point right here that was created for us, which is where we got this from. This is structure point here, structure. If we look at where's that last high that got created before we made a new low, which is this low right here, it would be this one. The push came from this low right here, not this one. We would have had to see a push lower for us to mark this as that previous structure point, right? So we know that's the area that we want to make sure we stay below if this momentum is going to continue. We can still easily come to that zone, have exhaustion, reject, and then that lower time frame structure is still being respected to the point that we can still see a move back to those lows. If we start to get above that, then at that point, what would you be seeing? You would be getting the exhaustion at the lows, price action getting back above your area of interest and getting back above these highs. At that point, it's invalidating that seller bias because of the fact that you're trading above structure points, you're trading above an area of interest, you're failing to reach these previous lows as well. So you have a few things going against you when you're looking at that. This is all information we're getting from literally the 1 minute, right? This is why I don't believe when people say like, oh, the 1 minute is noise. If you believe that the 1 minute is noise, in my opinion, you just don't know what you're looking at, to be completely real with you. People say, oh, it's noise. Come on, man. This is information right here. Yesterday, 4675. Are you looking at that on the 4675? I'm assuming you're looking at that on the futures market, correct? See, we're approaching those highs right now. We are getting definitely some pushback here as we're seeing prices climbing back above that area of interest. Oh, okay. You were just, oh, okay, you were just talking about a lower point then for those shorts. Okay, makes sense. Once we clear those lows, I'm assuming. What's good, brother? Good to see you, my friend. See, we're approaching that zone, so we're gonna get a strong push above that, or if we're gonna reject strongly. Let's see. And then we'll look at the 30-minute time frame to see how it closes. Even looking at this 30, that 30 is still looking pretty bearish, because you have price action creating lows, lower highs, new lows, lower highs. A new low got created. We could easily be making a lower high before continuing to push lower. But we got to get those rejections and those pushes below those areas of interest, right? We want to just get biased and married to that. So we have another 5 minutes until that closes. You can see it on the 15-minute time frame as well, how price action is still pretty bearish off right here, unless we really start to break above this. 5 minute as well, also still pretty bearish with price action creating new lows. Could be creating a new lower high point here. I would want to see the rejections and then the pushes below here. That would be ideal. Now look at how precisely it got to those highs, and it's showing some reactions there. We really just got to get that. We want to get the rejections and the exhaustion at these highs to respect that structure point, but we need to get that follow through below those 90s. Because if not, then what we would be seeing is this. This is what I mean. We have, again, we'll point it out, structure point right here, still being respected, but here's the difference. You have, we'll follow through here. That's bearish. We have our recovery point off of these lows. Price action starting to look like buyers are stepping in, right? Recovering. So this is what we would want to see. To go back into this stronger structure, we'd want to see price action for one, reject, which is what we're seeing right now. But then two, we want to get that follow through below this, for example. So that way we can basically eliminate this sort of bullish market structure that's being created against this right here. Does that make sense? Because then at that point, again, we get the rejections, we'd get price action fading out these buyers, because we're breaking below those structure points. We're breaking below areas where we have price telling us that buyers stepped in. You get me? We have that visual reference for us, obviously based off the technicals, because we bounced off that zone and we started to climb into this area. So we want to make sure, again, to repeat myself, the rejections for one, which is what we're getting right now, some exhaustion, but the follow through comes once we really get below those lows right there. So that way we can easily say, okay, we've rejected, we're now trading against this right here. Such a crooked line. This little trend that's being created right here. You get me? And we're getting back below our areas of interest where we saw in the past a move lower. Make sense? Because if not, what could we be seeing? I'm going to do it one more time. Just to really understand this. We have, this is what we don't want to see. This is why I mean that we want to get below this area right here, because we have price action rejecting the lows and recovering off of the lows, starting to create bullish structure on the 1 minute here based off of this right here, a high, low, a high, We want to make sure that we don't get here to this higher low point here on the 1 minute, reject, and then we stay above, and then we continue to push back higher and maybe possibly do an even deeper pullback. That's why we want to get below this zone right here. You get me? So we can just erase that possibility right there. We want to erase the possibility that price action is going to retest these lows and bounce and continue higher. So we want to clear those lows, make it more simple in terms of price action, and then we have the proof right here that price has made a move lower. That's what we want to break. If not, then we're starting to create, again, that structure against that. So we got to make sure we break those lows. Damn, we've already been on for an hour. We're at that area now where we had some buyers push back. We want to make sure we clear that. Let's see if we can get that with that NYC volume. Now that we have the 30-minute time frame closing, the 30-minute time frame is still looking good for sellers, because you have a slight recovery, nothing really strong, like closing really above the zone. We still kind of had like price action just sort of creating a new high. That's why I keep repeating myself that I want to make sure we break those lows. It's also these 5-minute lows right here. I want to make sure we clear that, so we can just kind of get rid of this bullish structure here that's being created. And this is that zone. So let's see, we can see that within the next we'll know within the next 5 minutes, you know, whether price action is going to be stuck here, whether we're going to make the move up, whether we're going to bounce. That's the beautiful thing about price action right there. You get the clues right there in front of you. Some nice volume coming in. Add another 30 seconds until this 1-minute candle closes. Let's see if we get a 1-minute candle close, start to close below that area. Right now we've reached the area, those lows. Let's see if we can clear that easily. This candle's looking strong. The momentum has definitely picked up off of that rejection off those highs. Look at that reaction off the highs, man. That's like precise right there. And again, where did we get that zone from? The lower time frames. It's a lower time frame structure point. So decent candle close right here, fairly strong candle close, closing below the area of interest. So it's still looking like price is trying to push, you know. Let's see if we can really clear that and continue with this momentum that we're seeing right here. We don't want to get any strong pops from this area right here. Ugh, I jinxed that. Yeah, we don't want to see price action like having engulfing candles back above this area, because then we'd be rejecting these lows right here once again. We want to clear those lows. That's what we want to do. But sheesh, look at that candle. This is that NYC volume coming in right here. This is what we were talking about. Yeah, we want to make sure we clear those lows right here. We'll see. It's a good amount of volatility coming in right there, though. So far, yeah, I mean, this is from the PPR report that got released. That volume kicked in and pushed price lower there. I want to see if we retest those lows, which is those lows that price created. The dollar, again, it's not really like picking up too much strength right now. It's still stuck within these areas right here. So that's not giving us too much information there. But let's see, right now price is at that little decisive point right there. See if we can get volume to pick up and we'll go. We have about like 2 more minutes until the 5-minute candle closes. We'll see if this 5-minute candle can close strong below this zone. We don't want to get any rejections here for the sellers to really continue to push strong. We got 1 minute until this 5-minute candle closes. Let's see if we can clear those lows and stay below. And then ideally within the next candle, we don't even get back above the 4690s and we stay below that, and we can expect a push lower. Let's see, it's trying. It's literally just like paused at this area right here. It's trying, but let's see, we'll be patient here. There you go, a little bit more volume coming in right there. See if we can follow through on that. But not bad. That reaction off of those 46.95s was precise. Fairly, this is a pretty strong candle right here. Let's measure that. So, no, it's a 30 pip candle right there. So we've cleared those lows. Let's see if we're gonna get a push through easy back into those lows. Based off the momentum so far, if we can stay below here, I think we could see a push lower. Because I mean, at this point, think about it. At this point, if we analyze price and we look and we go based off of just what we were just talking about, right? We were saying how we wanted to get below this area, because this is that area where we had buyers push price higher. So we wanted to make sure that we got the rejection here, which is what we got. But then, and more importantly, after the rejection came, we wanted to get below the area where the buyers push price higher. And I mean, look at that right there. That's clean. That's a perfect example right there of why you use the lower time frames. All of that information that we've been talking about during the session has been from those lower time frames. And I mean, look at that volume right there, right? This is, again, I don't want to boast about the technicals that we're seeing here, but again, the importance of those lower time frames is that we were following structure points all from literally right here. I mean, look at that push. Shit, look at that. That's nice. Look at that. So for example, this is what we were following. Just to repeat myself, and of course, if you guys decided to take trades, make sure you manage your risk. Don't get greedy. We're reaching that area right here where we've seen in the past strong reactions off of. We're getting right now reactions off that area. So whether that means take profits, whether that means to manage your risk, all dependent on your plan, of course. Make sure you follow that. Don't get greedy. Just follow your plan, whether it is that you look for buys at those highs, whether you're looking for continuations back below the area. Again, just make sure you pay attention to your trades and to the areas that you know you should be on the lookout for, which is again these lows right here. But what we're following was this. I see that some people joined right now. Just to kind of explain myself once more, we had price action lower time frame structure being created more on the bearish side. We had our rejections and our recovery off of that zone. We started to create a little bit of a reversal pattern against the sellers here. We understood the area that we had to look out for, which was these highs right here. We understood that if we could reject those highs, we want to make sure we get above this, because that was the point where we were doing, we were starting to go against this right here, which was this. Started to get a new high, a low, failure to get below this area, and we ended up creating a high. So at that point, we wanted to make sure we got rid of that price action. We wanted to get below that area of interest right here, so that way we can continue with the structure that we were following through from earlier. And look at how price action did literally just what we were talking about. We got the rejections, we got minor reactions off of that area, but we cleared those lows. And look at that move. It was a mirror basically of this move right here. This is 1, 2, 3 minutes. In 3 minutes after we cleared those lows, we pushed more than 80 pips, and price action right now is like more than 100 pips, right? We're starting to push lower, as you can see right there. So again, all information from the lower time frames, following it step by step, level by level, without getting greedy, without getting cocky, without claiming magical strategies here. Just price action and fundamentals right there. Beautiful. Fucking. But not bad. That's a strong move. Let me know if you guys were able to take advantage of some of that. And don't be ashamed to share that you maybe took buys. You know, what's, again, like I've said before, and I'll say it every stream, we're not here to prove whether we're right or wrong. We're here to trade, we're here to be objective, we're here to analyze the markets so that way we can continue to get better each day. You know, make sure you journal your trades, make sure you're following through on a process, something that you know it's repeatable. You know, we're not here to do random analysis. We're not here claiming magical strategies. We're not here to try and boast our trades or anything like that. No, we're here to learn. We're here to improve as traders. And I promise you, with consistency, and for those of you that might not be too familiar with the way that we have our approach, you're going to see how with that consistency and that time, in a month from now, 2 months from now, you're going to see your trading improve because you're following a much more, a better process, right? And you're not just here randomly looking at the markets, not understanding what's going on, not too aware of like the technicals, maybe completely lost with the fundamentals as well. Again, we'll be making sure to break down everything from the technicals to the fundamentals, trading psychology. We'll make sure to, you know, pack that up so that way we can have good lives here, okay? That's why I'm asking you guys to share your trades, so that way I can start to understand the way that you guys approach the markets, right? If you took buys, I want to know why you took buys. That way we can analyze that. That way we can understand your perspective and your point of view, and we can learn from that. You get me? Let's see. I got into sales at the high, closing at the 46.75s. I got into sales at the high, closing at the 46. I should have held it longer, but I took a loss on sales after 4-hour candle close. Stop loss was tight, but made my loss back on the second trade. So similar to yesterday. Yesterday you took a trade, or are you talking about yesterday? Not sure. Was that today or was that from yesterday? And we'll go to price action right now. I just want to see what you guys have to say here. Let's go back. Let's go back to studying price here. So now we have more information. Look at that. Look at that reaction off of this area right here. This is why I was saying, don't get greedy. Take your profits, understand where price is. Don't get greedy. Don't look for those home runs. You want to look for those repeatable actions, something that you can look to replicate every single day. You get me? Without having to switch up your strategy, without you having to say, you know what, I'm looking for 50 pips today, but then you see one strong ass candle and you think, you know what, now I'm looking for 200 pips. All of a sudden your trading plan just goes right out the window. None of that. You know, stay professional. Be a professional. Oh, sorry, I thought the screen was frozen. But let's follow through on what we were seeing. So We got the rejections off of that area of interest. 1 second, guys. Sorry about that. So we got the rejection off of those highs. We got the follow through below the lows there. We got price action to revisit the lows. So we know that for this session so far, with the analysis that we've done, we've been on point. We've been on point. The markets have been respecting the fundamentals fairly well, in the sense that we got that higher inflation report. So we understood that gold could be more pressured and could push lower. So we ended up getting a slight recovery, rejection of the highs, follow through back below our zone of interest. We now have price action revisiting the lows, breaking the lows, giving us new lows right here. But as we understand, how does the market move? For the most part, it likes to create its minor waves, right? It doesn't just go down. It doesn't just go up. You get me? Obviously, sometimes it does, especially with gold. A lot of times, not a lot of times, but sometimes you'll see that it's just like, just pushing, especially like if you were looking at gold beginning of this year, all of last year, gold was constantly pushing all-time highs. It was like you would look at gold and it would be up 500 pips and you're just like confused about what the hell is going on, because it's like all-time highs, right? But again, be a professional, take it level by level. So what are we seeing right now? Following the same concepts, same technical ideas. Off of these highs, we still have that lower, the lower lows and lower highs being created for us. We have new lows right here. If we analyze price, we know that easily after this minor pop-up right here, like this little lower high that got created for us at this area right here, that's where that push came from, and we finally broke those lows. So I would say if we're analyzing price and we have that, that means that price action could have a chance of even retesting that area and still continuing lower based off that structure that we have. So we would want to see, for one, the continuation below the lows, right? That's one scenario. But if we're gonna have exhaustion here, say we do a little bit of a pushback against the price action that we're seeing right now, ideally in terms of optimal price action, we wanna see price reject and stay below this area of interest. Because if we get back above here, it's messy. At that point, we'd be rejecting lows, we'd be getting back above an area of interest, and at that point, you're just looking at price action go back and forth, up and down. You know what I mean? We don't wanna see that. We want to see clear movement, kind of like what we're seeing right now. We want to see clear signs of who is in control. Right now, what are we getting? We got that low, a new high that's created. As we're speaking, price action is literally breaking these lows and trying to create another move further down. So we have this as an area of interest in case we pull back. That's one. Right now we have also these lows. It's kind of like that area of interest that price action could maybe push and then continue lower. Excuse me. Yeah, we want to make sure we clear that. Okay, that was today. The dollar, no, dollar didn't push up too high, to be honest. It's still at 0.23. It's still at that same area. But nice, bro. So like I was saying earlier with your comment, that's similar to yesterday. You got into earlier sells, you took one loss, overall follow through on your plan, stayed consistent with that. And you still took a trade that was good enough to recover your loss and give you profit right there. Excuse me. That's what you wanna make sure. What I would say at this point is make sure you journal and make sure you understand why you took those early losses as well as why you took that win later on. Because that way you can see maybe some clues. Because remember, from journaling is where you're gonna get those answers to improve your trading game. It's all gonna come from your journal. So make sure, again, analyze that first trade and see whether it's maybe during a certain time that you take more losses versus other times where you get more wins. Analyze that. Doesn't mean change it. I'm not telling you that tomorrow when you go to take a trade, don't take it because that means that you're going to lose it because you think that you lose every first trade that you take. That doesn't mean that. But what it does mean is, again, analyze that and understand where that's coming from. See if it's a mistake. For all you know, it's just price action. It's just the way that your plan is right now. Does that make sense? We're getting some nice follow throughs right there. But in my opinion, it's still a good way in the sense that you are recovering your loss and you're getting profit. But I'm just saying there's always room for improvement. So analyze that. Again, does not mean don't take everything that I say too literal and like maybe you start to now change up your trading plan. Nothing like that. Just again, take it into consideration. See after 1 month, you know, I like at the end of this month, of the month of May, see how often you maybe took losses earlier on. For example, that for me was something that I struggled with a lot. I'm not sure if you guys are familiar with me, but for me, earlier in my trading career, excuse me guys, gosh, sorry about that. Earlier in my trading career, I used to take trades before that 4-hour candle close, right? I used to take trades before 9 a.m. and a lot of those trades that I took before 9 a.m. for my specific trading plan, I would lose that first initial trade. I would get caught in price action, maybe doing a pullback against me as the 4-hour candle formed, as we reached that NYSE open. And so I learned from my own trading plan based off of my experience that I should be more patient and I should look to take more trades after 9 a.m. That doesn't mean that I strictly only trade after 9 a.m. For me, I trade more so based off the opportunities that the market gives. But based off my edge, I've seen that my trades after 9 a.m., after 9:30, when all of that volatility and markets settle, that's when I have taken my best trades. So if I'm analyzing that and I'm looking at that, my journal is telling me that my later trades are the ones that win the most, then as a trader, the logical thing to do would be to take trades later on in the session. You get me? Versus for some people, maybe it's opposite. Maybe some people take wins earlier before all of that volume comes into the market, right? That's why everybody has their own trading plan, their own way of approaching, and that's why you should follow your own plan rather than you maybe chasing strategies online or anything. Not saying that you guys are doing that, but just to kind of throw that reminder out there. It's all very much personal experience. I think the early losses are because I'm scared to miss the move, but after I take the loss, I don't want to lose again, so I stay extra patient and actually wait for the best entry point. Right there, you have your answer right there then. That means you're rushing into trades earlier on in the session. So that way, now you know that. Now you have that clue that those first entries that you take, for the most part, it's you chasing the market. So now you know. Maybe be more patient. Maybe look for better price points. I would say at that point, in terms of patience, I think you're doing all right. I think what's important about what you just said is the fact that you're waiting for your best entry point. You know, because I don't want to sit here and tell you just be more patient, because that's just so vague. Like, okay, thank you for the advice. You get me? It's more so the fact that you're saying you're waiting for your best entry point. So instead of saying just be more patient, I would say look for that best entry point, and that's it. Because you don't want to say, oh, I'm just going to be more patient, and then you come to trade tomorrow and you're more patient, and then you end up missing a move because you're trying to be patient, when in reality what you're looking out for is that best entry point, that risk to reward that you have. So I would say that's the thing to get from that comment. Look for your best entry point. If your best entry point comes earlier than you usually take trades, that's your edge. Your edge is to take trades off of your entry points, not to chase moves. You get me? So analyze that, write that down, and then see how that follows through for the next couple of sessions, or for the next month or so. Because you don't want to run into the issue where, for example, say you're thinking, okay, I'm going to be more patient. I'm not going to take trades before 9 a.m. And you decide that you're not going to take trades before 9 a.m. and then market conditions change, and next month it's actually the moves before 9 a.m. that make more sense versus the ones after 9 a.m. But because you've switched your trading plan, now you're going to end up taking losses because the better entries were before 9 a.m. Does that make sense? That's why I would say look for the best entry points, which is what you just said right there. If you analyze that, then you know, even if it's before 9 a.m. and it's before the regular trading hours that I usually do, I'm looking for the best entry point. If that means today that reached it at 8:38 in the morning, you have your edge. You're looking at your best entry point. You have your opportunity. Make sense? That's what I would say would be the smarter approach, because again, it's a lot of times you'll switch up your trading strategy at the same time the market conditions change, and it's like, damn, if I would have just followed through on my strategy, my overall edge, then I would have been doing good this month. But because I decided to change it up, now you're here dealing with losses that were unnecessary. You get me? So I would say good stuff in terms of like holding yourself accountable and being aware of what it is that you're doing. But with that being said, back to price action here. Let's see what we're getting. What are the clues that price action is giving us right now? We're still seeing fairly strong sellers in the sense that we have like a low, a lower high here, a new low right here. We're back at this little structure point right here. This is now a structure point on the lower time frame because it's a high that got created before a new low was created right there. So in terms of optimal price action, I'm going to say that a lot as well. Optimal price action. I love that word. In terms of optimal price action, we would want to see price action staying below this structure point right here and then giving us a new low just off of what the structure is telling us right now. Because if not, this could be a liquidity grab if we stay above this area right here and if we start to break above this right here. That could be a potential fake out if we start to see price action getting back into these areas over here. So we want to make sure we reject that. We get strong sellers, which is kind of what we're seeing right now. But we want to get that follow through and then further pushes below our areas of interest right there. So that way we can just overall follow the flow of the market, which is, in my opinion, more towards the downside. Like, yeah, we're seeing some pop-ups in buyers short term. And if we look at where that's coming from, it's sort of around this area, which is why I want to avoid that right there. So guys, we'll run this stream for a couple more minutes. That way we don't make it too long. We've already been streaming for like an hour and a half. So if anyone has any questions about what we looked at today, what we went over, please let me know now. That way we can get through that before I end the stream. And again, we want to end the stream. We don't want to sit here and just watch price action, because the more you sit in front of a screen, a lot of times with trading, it doesn't necessarily mean like the more that you do, the more that you get paid. In trading, it's opposite. For the most part, and you can ask this to any professional trader, you know, the less you do in trading, the better you're going to end up doing, which is something that a lot of traders, you know, have like a misconception of, you know. Remember, people have that mentality that it's like the more I do, the better results I'm gonna get, the more life is gonna give me. In trading, it's opposite. And I have that experience as well. I have my best trading months are the trading months that I take the least amount of trades. Because the less trades that you take, the more, excuse me. I would say the less trades that you take, you have less chance of losing. Because in the market, let's be realistic, markets, it's a difficult craft, you know. It's difficult, and if you really think about the opportunities that come in the market, it's not that often. Like if you really analyze the markets objectively and you remove that social media noise, you know that for the most part, those trades and those moves that really matter, it's more so like, okay, I want to make sure I trade less so I can take advantage of those strong moves that take place every other day. Not every day, it's every other day. Today and yesterday, we've had good moves, but you have to keep in mind, it was CPI yesterday. Today was PPI. We had one-sided information, which was just higher inflation. We had dollar strength. So in terms of like an edge, we know we had a strong edge because we had technicals in our favor, we had fundamentals in our favor. So the overall opportunities that we got were fairly decent. They were good opportunities. You get me? But we know that that isn't always the case. So you want to make sure that you're patient enough to actually wait for those optimal trading areas and those entry points that you know your edge is present at. So I'm not seeing any further questions. That must mean that we're good. If you guys can give me a little thumbs up, hey, we're good in the chat, so that way I don't just end the stream on you guys, please let me know. And also I want to let you guys know, if you guys check out the description, you'll see which broker I've been looking into, which broker I trust, so that way you guys can get more information on that. All right, guys? Yeah, exactly. And those are the days that we want to be on the lookout for opportunities. Those days that we have strong confluences. But all right. So we know what to look out for. We know what the market is right now reacting to. I think we're good for today, guys. Tomorrow, what do we have? I believe tomorrow's retail sales, right? Yeah, tomorrow, May 14th. Tomorrow is Thursday, I believe. Yeah, today's Wednesday. Yeah, today's Wednesday. Just making sure. Yeah, tomorrow, 8:30 a.m. Eastern time, we have retail sales being released, and we have initial jobless claims as well. That is going to be released at the same time. So we could have fairly decent volume off of that report, all depending on how it comes out. So we'll make sure to be live for that as well, guys. And so just make sure to stay on the lookout for that. In terms of gold, we already know what to look out for. So far, we're still rejecting. We're kind of like created a double top at this area right here. We want to now get a push below here, break up those 4670s if we're going to get any sort of further moves down. All right, guys? So once again, I appreciate you guys.